Crypto.com is everywhere these days, whether you've seen them on top of arenas in LA or in the ridiculous high budget ads. But don't let their flashy marketing fool you, because with all that spending, Crypto.com users are left with an inferior cryptocurrency platform that isn't actually rewarding you as much as you'd expect. In this video, I'm breaking down why you're probably better off using other platforms over Crypto.com. Whether you simply want to trade crypto, earn passive income on your crypto, or get a crypto rewards card, Crypto.com is far from the best choice. Top it all off with a pretty weak native token in CRO, and I think most crypto investors are better off elsewhere. Of course, I'll wrap up with my favorite alternatives for all of these products if you're interested in making your crypto investments go as far as possible. Let's get started. There are a ton of hidden costs when it comes to trading crypto, and these can add up fast if you're not aware of them. This is especially true in the case of Crypto.com, where these fees are higher than average. Now, I will say Crypto.com does offer an impressive collection of supported currencies, claiming over 250 supported assets, which is certainly more than most mainstream exchanges. But that doesn't fix the problem of trading fees, which start at 0.4% for users trading less than $25,000 on a monthly basis, which I imagine is most users. You can get a discount on this base rate if you stake the CRO token, which is another issue we'll get into more later. But in short, they ask you to stake a ton of tokens for a very small reduction in trading fees. The next issue is the withdrawal fees, which are going to get tacked on anytime you move coins out of Crypto.com and into another wallet. These will change with the market depending on gas fees, but currently they can cost you up to $25 per withdrawal depending on the asset. Needless to say, these can get very costly for people who dollar cost average over time and move their assets off of the exchange to keep them secure, or people who move them to crypto interest platforms to earn passive income, which many people will probably do outside of Crypto.com because their earn rates continue to drop. And that brings us to the lackluster crypto interest offerings on Crypto.com. They advertise up to 14.5% on your crypto, but as you'll see, it's incredibly difficult to get these rates. This is from a combination of the requirement to lock up your assets, the requirement to stake the native CRO token, a tiered rate system, and above all, recent rate cuts that lowered interest rates even further. For starters, you'll notice that they have different earn rates depending on the amount of CRO tokens you're staking, which again is the native token of Crypto.com. I'm not sure why they use the number $400 or less, because you don't actually get any added benefits until you stake $4,000 of CRO, which means for small investors, you don't actually get any rate boosts for holding CRO tokens, whether it's at the $400 threshold or not. And that means most users can expect to earn rates within these ranges. The trick is, the base rate is super low for all of these assets. You have to lock up your crypto for fixed terms in order to get a rate increase, which means you won't be able to withdraw or sell your crypto for 1 to 3 months at a time. This may not be a deal breaker for long-term holders, but it's not a requirement I like to see to earn interest. After all, it's better to have the option to be liquid when possible. Still, even if you lock up your assets for the maximum 3-month term, you'll be limited to 6% interest on stablecoins, 4% on Luna, Elrond, and Atom, and just 3% on Bitcoin and Ethereum. As you'll see in a minute, these rates are pathetic compared to what you can get elsewhere with no lockups required. Furthermore, if you choose to lock up your assets for higher rates, you'll be subject to tiered limits. For your first $30,000 of assets, you'll get the advertised rates. Those will be the rates you see here, again, as advertised. Any balance beyond $30,000 will earn 1/2 of the advertised rates. This is absurd to me because it means that locking up for 3 months will give you the same or even lower rates as locking up for just 1 month. All of this makes it really hard to earn meaningful interest on your crypto, whether you have a small, medium, or large portfolio. Note that you can still get a 2% boost on fixed term rates for being a crypto Visa cardholder of a certain status level. But to attain these levels, you'll need to stake at least $40,000 of CRO tokens. And as we take a closer look at the cards, you'll see that they're not quite worth it either, even if you have $40,000 to spare. The main problem with the Crypto.com Visa cards is that they require you to stake a huge amount of CRO tokens for very little benefit. For anyone new to the card, these are prepaid cards that you first top up with fiat or crypto. Then, you can spend the loaded funds anywhere you would normally use a debit card. Depending on your card tier, which depends on the dollar value of CRO tokens you have staked, you'll get a fixed cashback rate paid in the CRO token. The lowest 2 tiers offer pretty meager rewards, which hardly measure up to standard credit cards. The Royal Indigo and Jade Green level are where things just start to look good with 3% back and 100% back on Netflix and Spotify. But it doesn't come cheap with a $4,000 CRO staking requirement. Plus, you get no real benefits within the Crypto.com ecosystem. The $40,000 and $400,000 card levels are where you actually start to get meaningful rewards on your spending and bonus rewards with the Crypto Earn product. But again, acquiring $40,000 of the CRO token is a huge ask for a casual investor who just wants to get a few extra % back on their spending. And if you have $40,000 to lock up in CRO tokens, you're probably not concerned about saving on your $13 per month Spotify subscription. Even some of the worst crypto rewards credit cards out there offer a better alternative to the Crypto.com Visa card, because they don't require you to have a wealth of assets to get crypto rewards. In my opinion, this card really only makes sense for high net worth individuals who are comfortable with allocating to the CRO token. And the fact that everything on this platform is so dependent on the CRO token makes everything worse, especially because it's such an unappealing asset to hold, in my opinion. Ultimately, the CRO token has three main utilities: payment infrastructure with Crypto.com Pay and Visa cards, providing boosted rewards on the Crypto.com app, and as the core asset of its newly added DeFi platform. But in each of these cases, I don't think the CRO token is providing enough utility to actually be worth buying or holding. In order to get meaningful value out of trading, earning interest, or spending with a debit card, you need to hold a ton of CRO tokens, or at least $4,000 worth on the low end. And then you have to stake it, which comes with a strict 180-day staking period. So if you do this, you have to be prepared to lock up those coins for 6 whole months, a period that will restart for your entire balance if you ever choose to top up your staking amount. That's a lot of steps just to get a few extra % on your crypto, if you can even afford to do it in the first place. Now, these staking requirements do have some perks, because having tokens locked up for such a long period of time should lower the volatility in the token price. Stakers will also earn 10% APR on their staked token balance, but you can't compound this without resetting your staking period. Additionally, from an investment perspective, we also have to consider that CRO is already in the top 20 cryptocurrencies with a market cap of about $12 billion. This means it will take a lot more demand to continue driving the price up. With the token lacking any significant benefits for the average Crypto.com user, I don't see a lot of people allocating to CRO even as the platform continues to grow. The only exception I see could be in the DeFi space as Crypto.com expands there. However, as someone who's been dabbling in DeFi myself, I don't know why I would choose the CRO token to do it when I could use other assets with higher APR rates, more decentralization, better tokenomics, and blockchains that were built for DeFi from the ground up. Crypto.com DeFi is an easy transition from the main Crypto.com exchange, but I don't think that's big enough to drive value to the token. And ultimately, if I don't think the asset will appreciate, I certainly wouldn't want to buy, hold, or stake it when there are more attractive cryptocurrencies out there. So if you actually want to save and earn as much as possible in crypto, here's how I like to do it. For all trading, on-ramps and off-ramps, I use the Gemini exchange. They have free ACH bank transfers that are instantly available for trading, with trading fees starting at just 0.2%, assuming that you use limit orders on the active trader tool. This fee scales down with greater trade volume, but the base rate still beats Crypto.com by 50%. Plus, Gemini gives users 10 free transfers every single month, so you can dollar cost average and withdraw your assets without any gas fees whatsoever. And that makes Gemini the absolute cheapest way to exchange your dollars for crypto. For passive income on crypto, Celsius Network is the best choice in the industry. Unlike Crypto.com, there are no lockups or token staking requirements to earn great rates. Their best rates are available to all users, all of which beat Crypto.com's rates. The only tiers they have apply to Bitcoin and Ethereum balances, which are still vastly higher limits than the $30,000 valuation cap on Crypto.com. They're even adding free in-app swaps and a crypto credit card in the near future. And if you ever need to withdraw, Celsius covers all gas and network fees, giving users an unlimited number of free transfers. Finally, not that native tokens are a requirement, but I also think Celsius's native Cell token is really attractive because it provides benefits for owning as little as one token, and it's a deflationary asset tied to the growth of the platform. If you want a crypto rewards card, I still think most people are better off using something that doesn't require locking up assets, as even a standard cashback card could give you more bang for your buck. If you really want crypto back though, despite my critiques, I think even the BlockFi card is preferable to the Crypto.com Visa card. Gemini also just launched a crypto rewards card with decent rewards. And again, Celsius is launching their card later this year, which I expect to be even better than the rest. If you want to get started with any of these platforms, I'll leave referral links below where you can earn $10 in Bitcoin for trading your first $100 on Gemini, and $50 in Bitcoin for transferring your first $400 of crypto into the Celsius platform. So grab those freebies if you're interested. As a quick reminder, this is not an ad and I am not sponsored. I just like to share these platforms because they're what I use, and I think they're the best way to get ahead in crypto. For a clearer guide on how to use these platforms, you can check out this video where I walk you through every step of buying and earning yield on your crypto using both Gemini and Celsius. I'll see you in the next video.